Welcome back. The trade setup this morning is interesting. The Asian markets are very volatile. Hang Seng is now back in the green. A couple of markets which are moved into the red. SGX Nifty is indicating a gap up of about 50 points right now. Ashwini, Gujral, Sudarshan, Sukhani and Mitessh Thakkar now join us. Good morning. Ashwini, the basic texture of this market has been that gap ups have been sold into. Is 50-point gap up good enough for you to try a short trade, or are things going to be different today?
Good morning. I don't know about today, but I think the market is getting to the end of this, big decline from 12,700. Somewhere in this 98, 9,900 type of zone, you will start finding support. Slowly, these gap ups will not get sold into. So that way, don't get overexcited on the short side if you have like positional shorts, etc. Maybe as you get these gap downs, etc., or sell off into a gap up, look for booking some profits. Start to look for some buy ideas, because other than 100, 150 point downside, it does not look like the market has great amounts of downside. So if we gap up, yes, as a day trade, you can go short, keep 10,150 as stop maybe, and take it off quickly, because I think you will start to see now things moving on both sides. So that way, I think as large as the decline has been, sooner or later we'll have a sharp pullback which will really take the pants off of shorts. So this has to be remembered. The bigger the market fall, the sharper the fall. Sometimes bigger are the rallies. So EMs are at that point where they could have a sharp upside also.
Fair point. So what are the contours in the Nifty Bank, Ashwini?
See, 10,150 is the line in the sand, and this sort of a gap up gives you a good opportunity with a 50-point type of stop, and maybe you get closer to 99, 99.20. Not today, maybe in a couple of days. On the banks again, maybe 100, 150 point gap up should get sold into, and obviously, targets closer to 24, 150, 200 should be possible here. But overall, don't be in that big aggressive short mood.
Okay. Sudarshan, Sukhani and Mitessh Thakkar also join in. Sudarshan, hi, good morning. Even if we do get a pullback in trade today or through the course of this week, do you think it would make sense to sell into that rally? I mean, will it just be a dead cat bounce, you think?
Good morning. Well, it's a difficult trade. The Nifty has broken down on Friday below that significant support level of 10,100. So the first hope was that 10,100 will hold, and for many days the index bounced at those levels, sometimes rallied, sometimes fell. So there was a possibility that this would be the final low. At least the markets would stop falling. But Friday cancelled that possibility. We went way beyond 10,100, closed almost 100 points lower. Now the breakdown can occur and fail. That possibility is always there, that it may not then go to its logical conclusion, another 500 to 700 points down. But I have to assume that this breakdown has failed and the Nifty is going lower. A dead cat bounce is now imminent and due, but then that is what we have to treat it as, a dead cat bounce for short-term traders. Any trade above 10,150, and that's for the Nifty futures. A trade above a movement above 10,150 would be a signal to at least go long. But I would say if you are long, exit quickly, because this market must prove that it is not going lower. Up till now, we were hoping for a support, and that support has broken. So the contours are above 10,150, go long, take whatever profits you have. Your stops are 10,000, the round figure 10,000. There could be a bounce of 300, 400 points. I don't know. We'll just have to take the trade. And the prospect of a significant decline has opened up.
Okay. Well, Mitessh, I wanted to ask you if the Nifty Bank is any stronger, because there is news. They have a bit of a tailwind because of a big bond purchase announcement by the Reserve Bank.
Lata, you can add possibly ICICI Bank numbers, which I at least viewed positively to begin with. So, two things. Both the Nifty and the Nifty Bank are at some kind of pivot support. Last time the Nifty had bottomed out around 10,000 to about 9950, recording closings and intraday pivots, etc. But I think this is a very good area from where some kind of bounce back can happen. Now, today we might open with a 50-point gap up. So, the idea is that next few days, if we are not breaking below 10,000 to about 9950, then I think we are in for a stronger reversal. If you break down, then clearly I think the downward trend will continue. Similarly on the Bank Nifty, I think 24,200, 250 is the key level to watch out for. If we don't break below that, I think the decline would have made at least one low. That question will be answered in the next few days. But yes, these are the levels where the possibility is slightly on the stronger side. We are quite oversold, of course. The way I think I would want to approach is possibly to begin with buy into call options of the Nifty with a stop at 99.50. So, you might have a 100-point stop on the Nifty spot, but if you're buying options, your participation is slightly reduced. In case we get a reversal signals on the intraday charts, see a lot of moving averages turn up on the hourly, 2-hourly charts, then I think you will be aggressively long and look for a stronger bounce back, which could have happened from these levels. So the possibilities are there, but how it plays out is something which will determine my trading action.
Fair enough. Let's discuss individual stocks then. Ashwini, before your list, I just wanted your thoughts on how to approach ICICI Bank today if we have a gap up on strong numbers and, of course, your own list.
See, going by past evidence, strong numbers don't help. And I think if you get gap up on Bank Nifty, etc., it should get sold into. So that way, I don't think ICICI Bank, or for that matter, any of the private sector banks are really looking strong. So my sense would be, like we saw with crude prices, the day they went up, market actually went down. So till that sentiment is on, that should remain. Don't bank on results, bank on things which are not making new lows any further, like Bajaj Finance, like NIT Tech. There are things which are not making any new lows. Those are the places where you'll see the first stronger bounces. Results, etc., is an invitation to bash the stock.
Shucks. Okay, so what are your stocks?
See, the stocks, UBL, United Breweries, that's a sell with a stop of 1130, target of 1080. TCS is a sell with a stop of 1820, target of 1760. IndusInd Bank is in a really climatic fall. That's a sell with a stop of 1460, target of 1410. Adani Power is a buy with a stop of 34, target of 38. And Petronet is a buy with a stop of 213, target of 228.
Okay, and Sudarshan, what about you? What would you buy or sell? And your view on ICICI Bank as well, considering that the results have been so good?
Well, ICICI Bank will follow the Nifty, and the Nifty itself is not giving us very bullish signals, except for what you correctly described as a dead cat, the possibility of a dead cat bounce. So I would not buy ICICI Bank as a trade. It's much easier, and the Bank Nifty is on the verge of breaking down below that 24,240 lows. It's almost there. So I just avoid it. Don't short sell, but avoid the stock. The news makes no difference. There is a bunch of mid-cap stocks that could be considered for buying, stocks that are either finding support levels or have actually not made new lows. One of them is Torrent Pharma. Pharma has not made new lows in this decline, most of them, and they are long-term buying ideas. Torrent Pharma is a buy idea for today also. It's consolidating, and that consolidation can break on the upside. The very fact that it's consolidating while the Nifty has been hammered is good news for it. Similarly, KPIT Cummins. KPIT is another stock that has outperformed the IT pack. Here also there is a buying opportunity that exists. Assuming the markets remain stable, some of these mid-cap should do very much better than we imagine. And the third buy is Havells. Same story, it's holding on to its levels, it's consolidating when the Nifty was going down, outperforming. So the three ideas are on the assumption that if the Nifty finds support, there will be mid-caps that actually go up, and these could be part of that group. Two short sells quickly, Capital First, nothing in it. I've been downbeat on NBFCs before they started falling. I think there's more downside and pain there. And MFFC, Max Financial Services, same story, new lows every day.
Okay. Gentlemen, well, we still have Mitessh's. Mitessh, what would you buy or sell?
Yeah. So given the fact that we are close to 10,000, I'm attempting more longs here. Adani Power is a buy with a stop at 34.5 for targets of 38. Ajanta Pharma, again a stock which is close to important support zone of 970, 965. So keep a stop below that. Look for a bounce back to about levels of 1,004. And MRF gave some kind of a reversal signal along with a lot of trial stocks on Friday. So MRF is a buy with a stop at 62,400. Look for targets of 63,500. And the solitary sell call which I have is UBL. Try to sell it around 1120. Keep a stop at 1140. And look for targets of around 1,085.
Gentlemen, thanks a lot for giving us those ideas. We'll, of course, keep coming back to you for more stock checks. But for now, let's discuss some numbers. Giant Agro posted quite a weak set of numbers, actually. The revenues declined 8%. The EBITDA was down almost 13%, impacted largely by the castor oil segment. Vikram Udeshi, the CFO of the company, is with us. Mr. Udeshi, thanks so much for joining us. You've seen some pressure pockets this time around. Do you foresee more pressure in the second half of the year? And what could the trajectory be in revenues?
Good morning. I think the revenue fall is more on account of the prices. In terms of volume, we have maintained volumes have grown a little bit slightly, but the half year we've seen a decline in the top line only because of the price decline. If you see the net profit, we have maintained the net profit at 35 crores, 72 lakhs. And if you see the earnings, we have just increased the earnings marginally. So I don't see the results as a negative. This thing they have maintained, and this year we had a guidance of muted growth. We feel that in the next 6 to 12 months, we will be able to expand and come back to a higher growth level.
I'm more interested in the current castor seed prices. I believe they are now at the highest level since 2011, having tested 6,200 rupees a quintal. Even in the DISA market, they have gone to 5,330 in Gujarat. How does that work for you in terms of margins and, for the entire second half?
So the castor, based on the sowing figures and other fundamentals, with the rupee depreciating, the prices have moved up, and we expect that they could remain firm given the current scenario.
You can pass it on. Will it hurt your margins?
No, we always pass on our costs, so that should not hurt. I think we are well prepared, or we were for such a scenario, because we are creating interim data. And I don't think it will have any negative effect. We are well prepared. We will be able to pass on the cost. And I think the outlook, because of the steps what we have taken and the value addition what we are doing, we should look a little positive.
What do you mean by prepared? Do you have stock, so low-cost inventory, which can be a gain?
We have some stocks, and we also, because we, what we do is when we have any sales, we always cover physical stocks. So we are not affected by this thing. And we have a policy of, carrying small, long or short positions depending on the market. So this, since the market was looking, at a bottom out level since the beginning, we are seeing the bad rains or poor rains in Gujarat, we have been a little prepared for, prepared for the rise.
So you said the volumes have gone up marginally. What exactly has been the volume growth in this quarter? And for the second half of the year, what are you forecasting?
So we have, volume growth on a half-year basis of about close to 5%. And the price decline was about 6 to 7%. So volume growth, some of the numbers have not come in this thing because some of our large shipments were delayed, and we will see the effect of that volume coming in the third quarter.
Single-digit 5% volume growth that you've clocked in first half is something that you would expect to do in the second half as well?
I think that should be maintained throughout the year. As of now, it looks like the volume growth will maintain about 5% volume growth for the year.
5% volume growth. But both revenue as well as EBIT are down 12 to 13% year on year. So it's not even seasonal adjustment, it is year on year. Will that be the pro rata performance for the full year?
So some of the revenue EBITDA decline is on account of the finance cost. If you compare the finance cost, generally we pass on the cost. So in the EBITDA, if you look at the net profit level, we have maintained the profit.
Okay, but what is the debt?
In terms of long-term debt, we have a long-term debt of, close to 11, 12 crores.
Okay.
And rest of things is all working capital. Working capital debt is in the range of about 400 crores.
Okay, Vikram, we'll leave it at that. Thanks so much for joining us. So that's Jayant Agro. Not only are the numbers weak, but he's cautious even for the second half of the year, says that volume growth will be in low single digits. But the big story, reactions have been coming in the government versus the RBI verbal spat. CLSA says, and I quote, "We believe that independent decisions by the RBI have been a big strength behind the resilience of India's banking sector. While the difference between the central bank and the government are not new, this speech indicates that the depth of the differences could be much deeper and could impact sentiment in the currency and the debt markets," end quote.
All right, we take a break. We are coming back with Naveen Kulkarni of Reliance Securities to discuss some of the recent earnings with him. We'll also have VK Sharma of HDFC Securities to give us F&O strategies.